Greetings, members one and all of the Salivation Nation. Well, gold and silver have moved up a little bit today, but there is a roadmap to $1,700 gold in just 6 months. Let's explore how and why. Yes, this comes to us from kitco.com, and I've always kind of find it fascinating to hear what some of these predictions and how things can happen to get to a certain point. You know, no one really knows what the price of gold or silver is going to be within a certain span of time, but sometimes it is fun to kind of speculate and kind of make guesstimates as to where things will be based off of certain criteria. There's so much emotion in the markets, so I find it interesting to see the logic and reasoning behind some of this. So let's explore this article here on how gold prices can move up to $1,700 in about 6 months. You know, it's not out of the realm of possibility when you think about it. So determining gold's fair price is a very difficult task, according to the Australian New Zealand Banking Group, which has decided to take on the challenge in its latest report. Based off of gold's primary drivers, interest rates, inflation, and the U.S. dollar, Melbourne-based multinational bank determined that gold's fair value is around $1,400 an ounce, which is about $100 below the current price levels. We looked at all the traditional factors and compared their relative valuation against gold to determine whether it is over or undervalued. We found that gold is primarily driven by interest rates, inflation expectations, and the U.S. dollar. In other words, the dollar index and the strength of the dollar. This is by ANZ senior commodity strategist Daniel Hines and a commodity strategist Soni Kumari. Based on current prices, our model shows gold current fair value is around $1,400 US. Now, what is in this model? There's got to be a lot of different things in this model, how you determine that specifically, you know, how it's driven, you know, these interest rates, inflation expectations, and the U.S. dollar and the like. And how did it come up below that? Does that mean that about $100, well, about $91 as of the recording of this video, is based off of manipulation or some sort of artificial injection into the price movement? Or is that the fear and the emotion that I talked about at the beginning of this video? But gold bugs should not despair, the article goes on to say. A drop in gold to $1,400 could eventually boost the precious metals all the way up to $1,700 an ounce in just 6 months, concluded ANZ. Our model, and by the way, take that for a grain of salt, because these models that they come out with, you know, they can be tweaked to do certain things. You know, modeling, especially in the computer world, and how it's all based off the data that you input into them. And some of them can be quite impressive, but climatologists have been using models for a while to predict global warming and climate change. But none of them, absolutely none of them, have been borne by the actual facts, and their predictions have been dead wrong. So this will be quite interesting to see how this takes. Now, obviously, something like climate change is much more political, I think, than this, but doesn't mean that politics can't come into it. And I'm not just talking about politics with regards to campaigns and office holding. I'm talking about politics in the banking world and the like. So the model suggests that prices could breach $1,700 US over the next 6 months. This offers opportunities for consumers, producers, and investors. A pullback to fair value in the short term could present an opportunity for increasing exposure to the metal, Hines and Kumari said. With solid fundamentals, gold remains a good prospect for portfolio diversification. It's interesting that they're saying that there. In the future direction of the U.S. monetary policy, ANZ said that it expects one more rate cut this year, followed by a pause in 2020. This view is predicated on the U.S. coming through its mid-cycle slowdown, and that the trade dispute with China will not escalate further and affecting growth, the strategist said. The bank also sees inflation undershooting the Fed's 2% target for an extended period. Interesting. Okay. Combined with some stabilization in the DXY, this could see gold's fair value climb above $1,700 over the next 6 months, Hines and Kamari said. ANZ's model involved combining gold's three main drivers in a zero-coupon, inflation-adjusted U.S. Treasury bond. We used the yield of 30-year bond in our calculations to help mirror the impact of the U.S. dollar. We included a U.S. dollar factor using a regression model in our algorithm, the strategist said. According to our model, our valuation for gold is U.S. dollars and $1,410 based on the spot prices as of the 18th of October, September 2019. On average, gold traded at a premium of $90 to our model valuation. This premium has been in place since October 2018, when gold prices were trading around $1,200 before the current rally over $1,500. Prior to 2000, gold was undervalued, only catching up to its fair value during the financial crisis of 2008. So it took 8 years for that to happen. So here we can see gold's valuation model. So the valuation and the gold, you saw where it kind of came in parity here, on parity with each other there, around 2008. And then we see here where it is now, or where it's projected to be down the future based off their modeling. And then here, it's the gold valuation model from 2008 to 2019. There you go. We see here that here's the highs, where it was, overvalued here, obviously. Then you see in the 12 and 13, 2012, 2013, it was relatively coincident lines here, and then here in 2016, they're relatively coincident. Very interesting, fascinating indeed, but again, it is a model, and those calculations and how they actually did that is something that, we should come with some healthy skepticism for sure, but we'll see. But it is interesting. ANZ also noted that gold will be trading much higher if the U.S. money supply would be backed by gold. Well, yeah, sure, certainly it would. The widening gap between spot gold prices and the derived gold price, money supply versus total gold reserves since 1963, suggests gold is currently undervalued. Hines and Kumar wrote, gold would trade above $25,000 an ounce if the U.S. M2 money supply were backed by gold. Yeah, there you go. Interesting. Now that I can that would make sense, especially considering how much more they printed money. And so with the quantitative easing, definitely, especially since 1963, those numbers do sound very believable, and that is fascinating. But again, that's modeling and the like, and how they put that in there. It'd be interesting to see more detail on what's behind that model. Let's kind of take a look here at the prices for gold and silver today. I think it's interesting to see they're all up a little bit here. The markets were kind of shaky a bit today, but gold is up nominally, not just on almost 1/3% increase, $4.60. Silver is up 3 cents, and platinum was the big winner today at $26 increase, well over $900 right now. So there you have it. There's the prices and the news for the day, and the sneeze of the day. So that's kind of where we sit, and it is interesting to see. This is the first time we've seen kind of computer modeling making a hedge or a bet on gold, or where it should be based off of a computer model, which is, I can think, kind of unique here that they're doing that. And it is the Australian New Zealand banking group. Do they have an agenda? I don't know. It is interesting to see. I don't know much about the ANZ, but maybe some of my viewers from Australia and New Zealand, I have a few of those. Maybe some of you guys know a little bit about them and maybe what an agenda could be there. There always has to be some sort of agenda behind everything these days. But nonetheless, no matter what the agenda is from anyone about making any predictions of anything, we know as a matter of fact that gold and silver do protect and preserve our wealth. That's what they've been doing for quite some time, because they are money. And even though they are not used as currency these days, It does not take away from their properties as being money. And so I think that is something that we should always consider for sure when we're accumulating, or we pay attention to these prices and what is going on in the news. So there you have it. I would like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and subscribe.